Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of finance and business reports. Today we are looking at Putnam Money Market Fund and their certified shareholder report for the year ending the 30th of September 2025. Get ready for some serious number crunching as we break down how this fund performed and what it means for investors. And hey, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. If you want to dive deeper into this stuff, join our Discord community linked in the description below. Alright, so this document is basically a yearly checkup for the Putnam Money Market Fund. It tells us what the fund did over the last year from October 2024 to September 2025. Think of it like a report card for the fund and its investments. First off, let's talk about what it costs to be invested in this fund. For a hypothetical investment of $10,000, the costs for Class A shares were $44 or 0.43%. For Class C and Class R shares, the cost was $43 or 0.42%. These might seem small, but remember these are annual costs. Over many years, these small percentages can add up. Now for the big question, how did the fund actually perform? As of the 30th of September 2025, the 7-day current yield for Class A shares was 3.93%, and the effective yield was 4.00%. This means the money you invested earned a little bit of money in interest each week. This yield is important because it reflects the income the fund generated from its investments. The fund maintained a shorter maturity for its investments. This means they invested in things that came due relatively quickly. They did this because they thought the US Federal Reserve would cut interest rates more slowly than others expected. So they focused on investments tied to the Secured Overnight Financing Rate or SOFR. They also bought some fixed-rate commercial paper and certificates of deposit when interest rates seemed attractive for a short to medium term. They found value in commercial paper from large international banks because they believed these banks were financially sound. Let's look at some key numbers for the fund. The total net assets were a massive $899,724,861. That's a lot of money being managed. The fund held 93 different investments, and the total management fee paid was $2,351,196. This fee is what the fund pays to the people who manage its investments. Now let's see where the money was actually invested. The pie chart shows that 34.6% was in commercial papers, 13.8% in certificates of deposit, and a whopping 51.6% in repurchase agreements. Repurchase agreements are basically short-term loans where the fund lends money and gets securities as collateral to make sure it gets its money back. This large allocation to repurchase agreements indicates a focus on short-term liquidity and safety. A significant change happened on the 1st of November 2024. Putnam Investments Limited, or PIL, merged with Franklin Templeton Investment Management Limited, or FTIML. This means the investment professionals from PIL became part of TIML and TIML became a sub-advisor for the fund. This kind of reorganization happens in the financial world to create efficiencies or leverage expertise. Now we get to the really nitty-gritty financial tables. These give us a deep look into the fund's performance and holdings. Looking at the financial highlights for Class A shares, we see that the net asset value remained at $1.00 consistently across the years from 2021 to 2025. This is typical for money market funds where the goal is to maintain a stable net asset value of $1 per S-share. The income generated from investment operations was $0.042 per S-share for the year ended the 30th of September 2025. The total return was 4.26%. The expense ratio before any waivers was 0.43%. For Class C shares, the story is very similar with the net asset value also holding steady at $1.00. The income from investment operations was $0.042 per S-share and the total return was 4.26%. The expense ratio here was slightly lower at 0.42%. It's worth noting that Class C shares have a feature where they convert to Class A shares after 8 years, which can affect their expense structure over time. Class R shares also show a stable net asset value of $1.00. The income per S-share was $0.042 and the total return was 4.26%. The expense ratio for Class R was also 0.42%, making them competitive in terms of cost. This is where we see exactly what the fund invested in. A significant portion, 13.8%, was in certificates of deposit from major banks like Bank of America and Citigroup. Then we see 34.6% in commercial papers. This includes names like Apple, Incorporated Coca-Cola Company, and many large international banks. Finally, the largest chunk, 51.6%, is in repurchase agreements. These involve major financial institutions as counterparties. The fact that nearly all their investments are with highly rated financial institutions shows a strong emphasis on safety and liquidity, which is expected from a money market fund. The statement of assets and liabilities gives us a snapshot of the fund's financial health on a specific date. Total assets were over $902 million. Liabilities were around $3 million. This leaves the net assets at a robust $899,724,861. The breakdown by class shows class are holding by far the largest portion of these net assets. The statement of operations tells us about the fund's income and expenses over the year. They earned $40,782,366 in interest income. The total expenses before any reductions were $380,902,114. After expense reductions, the net expenses were $3,765,527. This resulted in a net investment income of $37,016839. They also had a small net realized gain of $114,759 from investments. Overall, the fund saw a net increase in net assets from operations. The notes to financial statements are probably the most detailed part of the report. They explain all the accounting policies and important details. For instance, Note 1 clarifies how securities are valued. They use amortized cost, which approximates fair value. Note 1b explains their repurchase agreement, stating that collateral must be at least 102% of the amount invested. Note 3 discusses transactions with affiliates, which is normal in the fund industry. It details management fees, administrative fees, and distribution fees. They also mention ongoing expense reductions and voluntary waivers by the advisor to enhance yields further. This section is the auditor's stamp of approval. PricewaterhouseCoopers LLP states that in their opinion, the financial statements present fairly the financial position of the fund. They also mention they have been the auditor for Putnam funds since at least 1957, which shows a long-standing relationship. This is essentially the auditors saying everything looks good and is in line with accounting principles. They've checked the books and found no major issues. Now, for my take on this entire report, the Putnam Money Market Fund appears to be a very stable and safely managed fund. Their focus on high-quality short-term investments with major financial institutions is exactly what you want to see in a money market fund. The net asset value staying at $1 per S-share is the primary goal, and they achieved that. The fund's strategy of maintaining a shorter weighted average maturity and focusing on SOFR-based securities seems prudent given their view on interest rate movements. The fee structure is competitive, especially with the expense limitations and waivers in place that help enhance investor returns. The merger of Putnam Investments Limited into Franklin Templeton Investment Management Limited is a structural change, but the report indicates a smooth transition with F. Timmel taking over as sub-advisor. The numbers in the financial statements are strong. With total net assets nearing $900 million and a clean balance sheet with minimal liabilities, the fund is financially very healthy. The slight net realized gain and positive net investment income show that the fund generated returns for its investors over the period. One key takeaway is the emphasis on safety and liquidity. The substantial holdings in repurchase agreements and certificates of deposit from top-tier banks underscore this priority. This means that while the returns might not be sky high, as is typical for money market funds, investors can have confidence in the preservation of capital. Overall, this report paints a picture of a well-managed conservative investment vehicle. It's a solid option for investors looking for stability and a modest income stream on their cash holdings. There aren't any glaring red flags here. It is a steady performer doing exactly what it is supposed to do. Alright, that is our breakdown of the Putnam Money Market Fund's shareholder report. What's your take on these numbers and what they signal for the company's future? Do you have any money market funds you're curious about? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate and financial documents. And don't forget to check out the Discord community in the description for more discussions and insights. Thanks for watching. See you next time.